In this video, we're going to take a look at not only our daily price action in futures, but also we're going to dive a little bit more into using the VWAP session indicator in addition to adding on a simple moving average. So let's get started with that. So good evening, everyone. Futures Brizio here. It is 7:40 p.m. on Wednesday, November 19th. Hope everybody had a great day. And as always, make sure you smash that like button, subscribe to the channel, and any questions or comments, leave them down below. And appreciate the channel support by everybody. So let's just jump right in. Okay, so I don't want to rehash everything, but I did talk briefly about this indicator the other night. It's a very common indicator, quite frankly. A lot of this, if you search VWAP on YouTube, VWAP, you're going to probably find 1,000 videos talking about VWAP, people using it in all different ways, different settings. But this is a pretty basic way to use it just for day trading and scalping. And I did take a few trades using this today, and you know, they were pretty good. But then again, the market was trending in the direction of those trades that I took too, which of course always helps. Any type of, especially momentum indicator or trend indicator, is going to do well when the market's actually moving and not chopping around. So, but just to reset, the two indicators is the volume weighted average price. Okay, that's this right here, VWAP. That's where VWAP stands for. Okay, and then the other one, the blue line, is just a good old-fashioned simple moving average. Okay, set to a period of 50. You can see that right up here, 50 SMA, and the VWAP session indicator. And just to remind you, I'm only showing the VWAP because I'm only using this for day trades and scalps. I'm not using it when I swing trade. So I have it set to show anywhere from the 1 minute to the 15-minute chart. I know this is 16, but doesn't matter. There is no 16-minute chart that I have here. Okay, so you know, basically the 1, 3, 5, 10, 15-minute charts all show it. And for the most part, I'm sticking with the 10 to 15 minute. That's kind of the sweet spot. I think 5 is a little short. You can use it to fine tune an entry or exit, but I'm not really using it besides that, and I'm not really going any lower than that for any reason. So I'm using it on those time frames. And again, the only thing I'm showing is the VWAP. I turned off all the upper and lower band and the band fill. Okay. And hide VWAP on the 1 day, but I'm not using it for that anyways. And I'm leaving it set to session. You can pick all these other things, but they're not going to work if you're using it for day trading. I don't think you need a century VWAP for a day trade. Okay, so just leave it on session. That's perfectly fine. And everything else I left the same besides the color and the visibility. Okay, and like I said, this other one is just a 50 period SMA. No magic to that. Okay, it's just a 50 period simple moving average set to close. Did not change anything at all on that. Okay, all right, so the basic theory behind this, guys, is pretty simple. You want to look for a market that is showing some trend. Okay, and whether you do that on these time frames, 10 or 15 minute, whether you jump out to a 1 hour or 4 hour and just look to see if does it look like it's trending on the higher time frames too. Although you don't necessarily need it to, because you can catch small micro trends within sideways price action, certainly, but it's better if it's trending on the higher time frame because there's just going to be more momentum. And of course, you want to try to trade it in the direction, preferably of the higher time frame trend. Although again, you don't necessarily have to, because there are good counter trend trades that can be had. But again, whether you're using the 1 hour, the 4 hour daily chart to establish your longer term trend, your odds of success are going to be better if you're trading in direction of the longer term trend. Just because if you're counter trend trading, you have to be aware of where the market might turn and go back in the direction of the larger trend. And when it does that, it's usually pretty violent. When the buyers or the sellers step back in to push a trend back again, especially on a short time frame, it's going to be like really quick, and you'll be like knocked out of a trade in one candle. So just be aware of that, and we'll go through it anyways and show you that. Okay. So the basic theory behind this, though, is as you're looking for trades, if you're looking for shorts, you want the 50 period simple moving average to be over top of the VWAP. Okay. If you're looking for longs, the other way around, you want the 50 SMA underneath the VWAP. Now, you could use really any combination of two moving averages. You could, instead of using VWAP, you could maybe throw a 20 period SMA on here. I mean, I don't know, just for a laugh, let's just look at that. All right. So I just added another SMA here. It defaults to 9, so we need to change that. Let's change it to a 20. And we're going to need to change the color just because otherwise we're going to get it confused with the 50. So just for now, because we're not going to leave it on here, we'll just change it to something. Okay, now so you can kind of see how the 20 period simple moving average is very similar to the VWAP. The VWAP is just going to be a little bit more reactive to price because it's using a volume component in addition to just price. So take your pick. Use the VWAP if you want a little bit more precision, but if not, a 50-20, at least in this market, works well. And you may have to also play around with the length of the moving averages. Every market's going to be a little bit different. But at least for these markets, I'm finding that these work fine. So like I said, no need to use both. Decide what you like. If you like VWAP, that's fine. If you want that precision, again, it's going to be a little bit more reactive. You can just see how it reacts to price versus the simple moving average, which is going to be just a pretty smooth straight line. When the market's trending, you're not going to have all these little bends, but these little bends can actually give you good pullback areas where you can either enter a trade or add to a trade that you might not get that with the simple moving average. So, but like I said, use your own preference. But in this case, a 20 period simple moving average kind of mirrors the VWAP. But again, you might need to adjust the length of that one depending what market you choose. But the 50 SMA should be a given standard. All right. So with that being said, let me just take the 20 off here, and we'll just leave the VWAP. And so that's the basic theory. So let's just start off with this. So this is rice. And let's see, today's price action in the New York session probably ran from about here, okay, down to obviously where price closed for the day. So this was our session today. This is the 10-minute chart. And there was no real, I did not take a trade in this today. There was no real good pullback area. Good pullback areas to see price pull back to or maybe even above the, certainly above the VWAP, but even if it goes above the 50 is still a good place. And I wanted to point that out because in this scenario right here, you can see that we had the VWAP over the 50. So theoretically, you say, well, wouldn't you be looking for longs in this case? Because the VWAP is trading over the 50. And that's what I said you need for longs, okay? So just highlight that area and we'll go out to a higher time frame. But you can see on the higher time frame, this is the 4-hour chart, that the market's clearly trending down, okay? There was a recent, just before that, we had a recent swing high put in right here, and the market was trending down, and you could actually probably consider this to be a swing high right here. Okay, a little minor swing high right here before this downtrend continued. So that's what I'm talking about, that, yes, it looks to be like, oh, this is a potential uptrend forming right here. Price pulls back into the 50 and it goes up a tiny little bit. Yeah, I guess you could say you could take a little scalp right here, but this isn't enough for me. I mean, I need a little bit more than that on these trades. I mean, I'm looking for more day trades than scalps. I want to be able to hold it for at least a few hours. And so, yeah, I guess you could say there's a little scalp right here, but I would have skipped this because the higher time frame is still showing a downtrend. And you can see once price did start coming back down, this move is like, what, 4 or 5 times the length of this little tiny scalp. So is it worth the risk to taking a couple of points for this, or just wait? Or this is when this starts to turn and come back down again. This is a much better trade in the direction of the larger trend. Okay, so that's what I'm talking about, and I wanted to use that as an example. So, but either way, I did not take a trade on this today because I didn't really see a good pullback area. Rice is something I'm just kind of getting to know. The other thing I wanted to just point out with rice, and I've been talking about this in my swing trading videos, is if we zoom out here, let's go to the weekly. I know a very long time frame, but you can see on the weekly, we are running into what has been historically a very key support level from about where price is now, about $10 down to about $9.40. Okay. So we're heading into it. Doesn't mean from where it is now, it might not push deep into this zone. And this is a weekly chart. So this is still a pretty big zone. And it doesn't mean it can't go lower either, because you can see all time we do have more lows, historical lows sitting below that. And I've mentioned this a few times. But either way, I'd be a little bit hesitant going short from here, even if I do get a setup. But of course, I don't want to go long right now either, because the trend is technically down until it's not. Although I would say maybe with this market, maybe we get another push down, maybe deeper inside this zone right here. Uh, you know, could be something to think about. You can see how wide this zone is, because again, I drew it on a weekly chart. You can see versus the candlesticks, this is a pretty big zone. So I wouldn't, at all be surprised if we see price continue to work down into this zone. But it's just it's an area just to keep in mind. Okay, so leave it at that. It's an area to keep in mind that um, we could be reaching a point where price might want to turn around. And again, getting back to my swing trading methodology, which is using commitment of traders and seasonality. Again, we still don't have COT data, even though the government's reopened. We're still waiting for that to catch up. Still don't have it, but we do have seasonality data, and we are still heading into a seasonally bullish time for rice. So I wouldn't be surprised if rice, tries to turn higher, but we'd have to see a violation of one of these higher time frame swings before I would look to think about a change of direction. And to me, that's this area right here. Until price starts to make higher highs and breaks through and smashes and takes out one of these major swings, which would be this one to me on the 4-hour chart, then there's this downtrend is still intact until then. And like I said, there is still room to take this thing down further. Okay, but that just gives you an idea. Okay, so let's jump over to soybeans now. Again, higher time frame. Soybean, this was the big sell-off on Friday. Price actually did recover and made a new high. And so if we look at kind of, okay, well, where's our higher time frame swing? You can kind of say it's here. I think I already drew it on this chart. Yeah. This is just the continuation chart, the one that just basically links together all the contract months, so you have more price history to look at. So this is like the front month, which is December, but it has all the old price history, which you wouldn't get just looking at the December contract specifically. Okay, so you can see we have this swing right here, but we've had price trending down. And so, as long as it holds this area, I would still consider this to be in an uptrend. Okay, but you can see there's been a pretty significant move down, and certainly plenty of areas here to take potential short. So here was the sell-off last Friday. We broke market structure on this 10-minute, 15-minute time frame, broke structure here, came back up. VWAP now trading underneath the 50, failed to go up and make another high right here. This was a great selling area. Here again, This isn't as clean, but price moves sideways. The VWAP moving sideways, but still under the 50. And this would have been another area to think about a short. And then we had this one, which was today, and this is the one that I actually took. I did get out a slight bit early, I think right here. It did go down a little bit more. The market's closed right now. It will reopen in an hour or two for the night session. But anyways, this would have been a great shorting area right here because pulled back over the VWAP back to about the 50 and then rolled over again. And here's that zone I drew on the 4 hour. So between where it is now and here, I think, our is fair game for taking shorts until we change direction again. Okay. And, you know, start to take out some of these swing highs on this way down. Right now, I think the pretty obvious short-term swing high is right here on the, which you can see on the 10-minute chart. So any, resumption of the uptrend to come up here and take out this area, if this is as low as it goes, then, that would, to me, would signal the resumption of the uptrend. Now, just because this zone is sitting way down here does not mean price is going to come all the way down to it. Okay, it very well may stop before that and reverse. So, but I draw those out just so I'm aware that if I am trading short into those areas, that once I start to get into one of these zones, I'm going to probably, pump the brakes on taking any more positions in that area in the direction of that trend until it proves. Now, on the higher time frame, if we come down and break this rectangle, then we probably will continue down. Now, there is another zone not too far below it, right here. So, could drop further into there. And then, we've got another one sitting here. And I'm just looking for the major swing points, where price really pulled back and, grabbed liquidity and went higher. I mean, we have little sub swings like here and here, but I'm looking for the big ones that just kind of stick out on the chart. Okay. And I'm just taking a quick look at the higher time frame. You can see, soybeans has been in a very bullish run, which it's seasonally soybeans should be up this time of year. And so again, I think you still have to give a nod to the bulls here until it proves otherwise. But again, it doesn't mean you can't trade short positions on these on the way down, which is counter trend technically to the higher time frame, as long as you're aware of what the higher time frame is doing and don't have unrealistic expectations about how far something's going to go, because the further this pullback happens, if the uptrend is going to resume, the lower this goes, the closer we get to that reversal happening. And when it does, you get caught off guard and it just rockets up, and you could be in the middle of a profitable trade, and then all of a sudden the buyers jump in, some news comes out to catalyst to resume the uptrend, and then bang, it turns around in a blink of an eye, you get stopped out. But at least at that point, that the uptrend's continuing. Now you start looking for longs. So just be aware when you're trading against the larger trend. That's all. Okay, so on to soybean oil. Again, taking a look at the higher time frame, we are technically still in an uptrend here. But we've had a really big pullback, and here on this 4-hour time frame, this was our last major swing low. So again, it's pretty far down. However, we do also on the 1-hour chart, which is where price kind of reacted from here today. We do have this little, I would definitely consider it a minor zone right here, because it's happening on a shorter time frame. This is a 1-hour zone versus the 4-hour, but this is just something to keep in mind. Again, it doesn't mean that price is gonna bounce and continue to go higher here. In fact, you can see I've got some arrows drawn, so we go to the shorter time frame to potentially see it bounce up here and then turn and break. Now, if this area holds and we start to see bullish price action take us back higher again, particularly if we, come up and take out like, this area right here, which is the last kind of major swing on this time frame, I think that would definitely tell us that the uptrend is continuing. However, if we, so I would expect price to come up further here. The market just reopened for the night session in here, so um, yeah, it's 8 o'clock. I didn't think it was that late. Then yeah, price will come up here and roll over. And if it does that, then I think we will come right through this because we just tapped into it already here. So if price comes up and rolls over and starts to make another bearish push down, I don't think this area will hold again. I think it'll go right through it, which again is only a 1 hour zone anyways. And then we look lower down here to this daily zone as the next potential target. So in the short term, still bearish soybean oil, assuming that this area holds, which if bearish for now, assuming this area does not hold. If it does, and we start seeing higher lows being put in, higher highs, higher lows, and start stair stepping up. And certainly, if it makes it up, take out this swing right here, then that would negate the downtrend, and we'll likely continue the uptrend. And again, we'll just shift our view to looking for longs, because at that point the VWAP and the 50 will start to turn up, and we'll have the VWAP trading over the 50 instead of below it, and we'll start to look for long positions. So it's at an interesting spot. Just be careful. I mean, I don't trade the overnight session anyway, so I don't really care what it does between now and tomorrow morning. So when I get up tomorrow, I'll come and see what it did during the London session. Did it pop up here and break? If it did come back down here and break through here, then I'll be looking for shorts during the New York session, the North American session tomorrow. Okay, if it's stair stepping higher and it looks like it's going to keep going higher, then that may be the resumption of the uptrend. Okay, so Canadian dollar futures, just switching gears a tiny bit. Again, zooming out to our higher time frame, we are right back at a 4 hour zone right here, right into it. We actually tried to pop through that today on Wednesday, failed to break low. It came right back inside the zone, and then really didn't do much else the rest of the session. So here we are here on the 15-minute now, and we are still, technically trading bearish here, 50 below above the VWAP, but we'll have to see. I'm neutral on this right now because again, we're in a critical zone. It doesn't mean it won't break through it and just keep going lower. And if it does, great. Then here's our next target, somewhere between the midpoint of this big imbalance candle right here and these lows, somewhere in here. We'd expect price to come down. So that would, probably give us a couple more days of day trades anyways. So if this area breaks and we continue to try to look for shorts through this zone, if that happens, great. But if we get this thing to start turning north again and the 50 starts, cutting, underneath, and these things start turning up, because we already do have you can see the 50 is already underneath the VWAP. Now, usually on uptrends, right? The 50 is usually on top. So now if these rotate and turn back up, then the 50 would be, you know, the 50 would be in the right spot to have long positions. Okay. So we'll see what this does during the overnight. I'm neutral on this just because of where it's sitting right now. We could, the way this looks now, who knows, maybe this is going to put in a higher low right here and we start going higher, but it could also, I could check tomorrow morning and this thing could just break down and be, back below this zone, in which case I'll continue to look for shorts down to our next level. Okay. So that's Canadian dollar. Soybean meal is very much like soybeans. They mirror each other a lot. We have very, very similar areas here. If you look at the 4 hour chart of soybeans and look at the 4 hour soybean meal, we have very similar zones. They're not exact. We've actually broken this. We have this zone on soybeans, right? If we just click back over to soybeans, right? We have this zone right here. It hasn't gotten there in soybeans, but in soy meal, it's already, if we look at that as the same zone, because this was last Friday, that big sell off on Friday, we've actually broken that area already. So to me, that actually suggests that soybeans probably will go lower, because These two follow each other very closely. They're not always going to be exact, but they do follow each other. And if soybean meal has already broken through a recent swing like right here, there's a high chance that soybeans is going to follow. So, but in soybean meal, so okay, where do we look beyond that? Well, we've got a zone right here, and then we've got this one back here. So these are, kind of our next two layers of support to look at for price to continue down into here. And so back to the 10-minute, we can just scrunch this down. You can see here's that first layer I drew. So, overnight, love to see like a little pullback back above, back towards the 50, and then set up for a short, and then, trade it at least down into this zone somewhere. And if it manages to take that out, then we still have another layer down here that, price, if it breaks through there, it'll probably continue down into this area. But again, from a seasonality standpoint, we still have bullish price, seasonal pricing going on. So I do keep that in the back of my head. But for now, we're short-term bearish. Corn broke down big time today. So again, we zoom out a little bit on corn. We've got this zone that price is broken right back down into again. Hasn't come into the zone. It's sitting right on top of it. So this is much like what we looked at like with rice, where, we'll have to see what it does when it gets closer into this zone. Are we going to bounce from here, or are we just going to, and keep going up, or are we going to break through this area? In the short term, I think we could have another push lower here. Just because we haven't actually come into this zone yet. So, again, to see some sort of, push higher during the overnight, and then, have it come down and push deeper into this zone. And then, whoops, and then we'll see what happens after that. Okay. So that's corn. And again, if we stay on the 4 hour here, just reset this chart a little bit. If we get through here, then, we've got more layers like down here and down here. But, if this area does not hold this time, then, I think we've got some good momentum. We do have a price gap here. Price gaps tend to get filled. You don't really see price gaps like in Forex markets, but you will see them a lot of times in futures markets. And usually they happen on Sunday, which is what this is when the market reopens. You can see down at the bottom, this was a Sunday market open. That's usually what causes these gaps, just low volume and liquidity in the market. And so if we break through here, just keep this gap in mind, because that could be like, pop through here with a big wick, fill this gap through this box and then turn and go up. So I'll keep a close eye on that gap. But if it manages to go lower and take that out, then, we've got a layer here and then further down in here. Okay. So, but in the very short term, I would say I'm still bearish in corn, but we'll just have to see once it gets deep into this box and then breaks through it, what it does with that gap that's sitting just below here. Okay. And then lastly, just to talk about hogs, not a lot to talk about. Hogs is, again, as I've been talking about, is sitting inside of a zone here on the 4 hour chart, and we can zoom out, see it. Here's the 12 hour. You can clearly see this area is acting as support. Prices bounced off here. Again, we do have lows sitting down here. This is actually back in April, so it wasn't that long ago that we saw price, significantly lower. So we do have room to go lower for sure. But this area where it's sitting right now has been a place where prices bounce from. If we do get through this box, you can see it had one candle try to get through. It wicked for a small wick and then right back in. But if it does get through here, then I think we could see significantly lower prices. But I'm not willing to trade it while it's inside of this box at all. I'll just sit and watch it. And beyond that, if we go to a shorter time frame, so here's the 10-minute with you can see VWAP and 50 moving average just kind of like very tightly compressed and just one cross in the yellow. And this is a chop zone here want no part of. So, and you can see it looks like, oh, I thought maybe we're going to break out. It came down, came back up, failed, right? And now price, especially when price is trading in between two flat moving averages like this is just not an area I want to trade. So until we start either, clearing this congestion area, basically, at this point, I'd want to see price definitively break this high and start stair stepping up. That could be our reversal off there. Now, people might point to this and say, well, this is a higher low that was put in right here. Price is going higher, maybe, but until this turns and goes up and takes out this high, this is not a higher low. I mean, this could just be a swing right here, and then it goes down and takes this area out. And this is just the continue. This would just be like a continuation of the downtrend from here. All right, so I don't know which one's going to play out. Again, seasonally, where we should be heading into a more bullish time of year for hogs, but we don't. Again, we don't have COT data, so we can really only go by price action. But this is of no interest to trade this while it's inside all this chop and doesn't really know what it wants to do. And this is not the type of asset you want to just be throwing, trades against the wall to see if one sticks, because there's no micro or mini contract in hogs. So if you're wrong, even on one contract, it can be, several $100s of loss, even on a short time frame, small stop loss, one contract. You could still be talking about several $100s of loss if you're wrong. So I do watch this market, but unless I'm very sure about a trade, I don't take it. I mean, there were a couple of shorting opportunities here, right here, basically right here. But basically, since it made this low last Thursday, we hit this low right here. There's I have no interest in anything here, not even this one right here. So because it just it's inside this chop zone, and I'm not interested. So if this turns out to be a higher low and then we break and continue up and take this high out, great. Then that will definitely shift my bias to the long side. But if this high holds and we continue to work down, then that's fine too. But I'm still not going to short it inside of here in this box. Unless it comes down and takes out this low down here, and then maybe I would think about continuing the lows. Again, I don't need to trade this market. It's cool to watch it. It doesn't move. It only has a pretty limited trading session, so it tends to just make its move for the day, in the first couple hours, and then it's done. So if you don't catch it early, there's really no point trading it. So unless you see kind of the ideal textbook sign up that follows your rules, I would just skip it. So I will watch this and just see how eventually this chop zone will break. Either we'll continue the downtrend or we'll finally smash through here and the seasonality will take over and, we'll get the bulls back in here. But we don't have that right now as far as I'm concerned. So, all right. So yeah, that's it, guys. So, we took a look at rice, soybean complex, Canadian dollar, corn, and lean hogs, both from a higher time frame standpoint and levels, just to kind of again just help ground yourself on where the trend is on the longer time frames. Whether you want to look at a 1 hour, I would suggest a 4 hour at least. And if you want to go higher, fine. But if you're scalping or day trading, I'm not sure if you really need to go too much higher, except that you want to make sure you're not sitting at a very larger key level like what we saw with rice. All right, but kind of look at those if looking to take day trades or scalps on these short time frames, 15 minutes or lower. whether you're using VWAP and 50 SMA or something else, at least take a look at the moderate high time frame, like the 4 hour. It's a good kind of gauge of where the trend is. And again, it's not that you can't trade it counter trend against that, but you do have to understand that when you're trading counter trend, just be very clear about the levels that you're at, so that you know where potentially price might turn around, so you're not caught. And you could be in a really great trade going in profit, and all of a sudden it comes into one of those zones, and bang, a bunch of liquidity is tapped, and it turns and just runs the hell away. And you go back and you look at your chart and you're like, what the heck just happened? Well, it's because the higher time frame level and the higher time frame trend just kicked in and continued, and you got caught trading into a level that was really a liquidity run. And so that's why I said it's always good to look at those higher time frame. Again, it doesn't mean you can't uh, counter trend trade them, but just be aware of where you're sitting on the higher time frame levels, right? And I keep repeating myself, but it's so important. And people sometimes well, I don't want to look at the higher time frames because then I just get confused. It's not a matter of being confused, right? You can take the counter trend trades. That's okay if the larger trend is up and there's good shorting opportunities on the short time frame. Fine, take them, but just making sure you're looking at those longer time frames and picking out areas where it could potentially turn. Those could be your management areas. Those could be say, well, if I'm in a position, that's where I'm going to put my take profit. When it runs into one of those areas, I'm going to get out. And if it continues to blow through there, you can always re-enter later. Okay. But you just don't want to, so those could be good management levels if you're in a trade. And again, just to be aware of where they could turn around. And there might be more than one. Like you saw on a couple of those charts, I drew 2 or 3 levels, right? Because I looked at the 4 hour, the daily, the 1 hour, and you can kind of see those big swing levels. And you're not sure which one is going to actually hit. You can have, ICT traders, smart money traders saying, well, I'm looking for fair value gaps and all that stuff. Well, that may or may not work. I think just have a couple of areas that to say, all right, I'm either I'm either gonna look to exit the trade when it gets into one of those areas, or if it's already at one of those areas, I'm not going to trade. I'm going to wait for the market to show its hand to see if it's going to go through there and just continue on, which then you'll have your opportunity to enter, or is it going to bounce and continue that higher time frame trend? Okay. So again, they could be management areas, or they could just be areas where you just stay out if price is already sitting there, like what we see here with Hogs. So, all right, at least that's how I do it, guys. Again, everybody, you got to make your own trading decisions. Okay. I have no idea what your strategy or tactics or your risk tolerance is or anything else. So, trade as you see fit. This is what I do. And, I had a pretty good day today. So, but it's one day. So anyway, so I'm going to leave it there, guys. Again, make sure you smash that like button, subscribe to the channel. Questions, comments, leave them down below. And hope you have a great night. We'll be back tomorrow. I'll try to make something maybe in the morning or midday session. I didn't get a chance to do that today. I was a little tied up. So, all right, guys, take care. Have a great night, and we'll talk soon.